Hello everybody. Okay, so today this training video is about making entries and where to get out if things don't go well in different circumstances. So the first one I'm going to go over is RSI oversold. Oversold is the parameter on which time frame. I'm going to use Palantir as kind of a guide. So with Palantir, the reason why I love doing oversold entries because it's pullback, and I like to play off the all-time high names because there's the least amount of resistance if it's going to go make a new all-time high. As you'll see, this name did make a new all-time high from its 4-hour oversold. But I mean, on whatever name you're playing, it works for every name the same. It's just there's more resistance the further you are from its all-time high. So that has to be factored in. That is why I play the blue sky names, because if I can make a 4-hour oversold entry on a stock, that should be setting a weekly higher low for a continuation, and which is happening here on Palantir. So that's 4-hour oversolds are important, and like I said, when it does hit 4-hour oversold, I take it off my watch list altogether until it makes a new all-time high. So it made a new all-time high. Now I'll put all my alerts back onto it. Okay, so for Palantir, from this all-time high, which it hit over here, 84.80, I bought the first 4-hour oversold, which was, we got hit 4-hour oversold here. And so from this point, I go down a time frame to the 1 hour. So I'm waiting for a candle to break to the upside to make an entry. So this kept on flushing down. I guess this I can't remember which one I bought. If I bought this or like this candle breaking here, because hourly bounce here, but we did see more downside from that. But yeah, I made a first initial like $4,000 entry at this point. And then I doubled it and got to 8,000 when we flushed further. I think when we broke 65, that's when I made my second entry. So I kind of made an entry when I was paying real attention when we flushed 70, because it's a nice even psychological number. That was my first entry, and then 65 I made my second entry, and I was not going to make another entry until I saw a bounce. So yeah, 4-hour oversold. Then I use the hourly to scout my entry. I like to see the big numbers, hold numbers, flush, and then I'll buy in that area. And once I make my entries, I wait for a daily bounce. So for a 4-hour oversold, I would be waiting for a daily bounce. So right here we got our daily bounce. Like there's a possibility that we keep flushing to the downside, so that is also another risk, that if we just keep flushing, it's one of the strongest names and hanging around all-time highs. I'm focused on this name, so I wanted this entry. Fortunately, we did get our daily bounce fairly quickly, and in this candle I was able to, or this one or the next one, I was able to get out with 25% on an option trade. And I like to sell 75% of my option contracts when we see a 25% boost. So I basically get my money back and the option runs. For 4-hour oversold, I would be buying 2 months out. For hourly oversold, I would be buying 1 month out. And 1 month out, you only need to see a 2.5% bounce before you have 25%. It's about 10 times as fast. And you get 10 times the amount for, percentage-wise, and probably around 5% for 2 months out. You would need to see. And okay, so yeah. Anyways, I buy the 4-hour oversold. I wait for the daily bounce, which it did at this point, and now in this bounce, you are wanting to get risk-free. Like I said, coming from an all-time high, it's the highest likelihood it will be one of the stronger bouncers because there's less resistance overhead. So was able to get risk-free, but if I didn't get risk-free, where I would know to put my stop is when this daily bounce tops out, and it comes back down, I would not want to hold it underneath this. This would be your stop, because you do not want to hold it on a daily downtrend at that point, because that's showing sustained selling. Especially if you're in 1 month contracts, or whatever, that it's showing a sustained downtrend. So the trick is getting from 4 hour oversold, you want a 1 day bounce. From 1 hour oversold, you're waiting for a 4 hour bounce, and in that bounce you need to get risk free. It's like I said, it's a very high likelihood. It works for me more often than not. It will take a lot of time to practice and do it with smaller amounts, less contracts. Try and do it with 4 contracts if you can, and then you would be selling 3 and letting the 1 go, and focus on in the money or at the money contracts, because you want it to keep going past where your strike is. And yeah, so wait for the daily bounce, wait for whatever bounce on whatever time frame you're in. You go up a time frame, and then if you can't get risk free, you should stop out at the bottom of where the bottom happens. All right, so that's RSI oversold. So playing off supports and patterns. All right, I was going to go to Apple for this one. So Apple, fortunately, we were heading to daily oversold, and we had this. So this was confluence. It had a bunch of things in one area. This is why I bought this name. We had the 200 moving average. We had this support right here, and we just broke that by a few pennies, and we just shot up afterwards. And I was able to get risk free, I think, on this day right here. The second I bought this day, I was either risk free that day or the next day. Let's see. Or maybe it was a little bit low. Actually, it might have been this day. Sorry, and at this point I was waiting for a weekly bounce, which we got that bounce. We got that bounce right away from there. So daily oversold. We have this support here. I was looking at an entry at that level. So I wanted to see a 5-minute pivot. So this was the support. I think we yeah, I think I got it on one of these. I believe I bought it off this entry here. It might have, it definitely was that one. Oh shoot. Damn it. Okay, just 1 second. I moved that support line. So yeah, was playing off this bottom. I mean, overall, we're still looking at a possible head and shoulders pattern here. Or we're looking at an equilibrium to play out at this point. All right. So I believe I bought on this day here. The first day it actually did break. Right here. I was seeing if this support held one. It didn't, but then it shot back up right afterwards. Like I was waiting for either so this 5-minute candle, it broke only by a couple pennies, and then it started heading back up. That's telling me that it just wanted to flush a bunch of stops. So a lot of people would have had their stops right there, and they just wanted to flush that out. So new traders, they would have gave it no leeway, and they would have just played. They would have sold the bottom essentially and screwed themselves. So I did buy this first candle here, or this break. It was also a break of 220. Actually, no, sorry, that's what I did. Once we were daily oversold, I played the break of 220. 220, that's right. So I bought somewhere on these two candles, but it was the 220 break that had me interested, and having this support here. I wasn't gonna sell it if we flushed down further, a bit further. It was the 220 break, and we were extended on the daily. It was coming down hard, and that's the thing. You want these things to come down hard. If it's like slow moving, like methodical, this could get very extended and go a very long time. When it comes straight off a high, an all-time high especially, and shoots down very fast, it's more likely that it'll go oversold fast and then make its bounce. But the painful part is when it's methodical selling. You don't want, if you're coming to a support level, you want it to happen fast as possible. And that's what makes this support level more, and I also consider this a level, not a hard line. So sometimes you want to give this a little bit of leeway, like it might flush by 1% or 2%, but if it's coming down fast to a major support level, you want to give it a little bit of leeway so that you don't get stopped out. Yeah, and in this bounce, daily oversold, I bought 2-month out contracts for March, I believe, for 220 calls in March. I was able to get out. I believe it was on this candle here, no problem. One of these candles. I think it was the second candle because, yeah, pretty sure it was, or this breakout candle. And then earnings gapped up and sold off. But yeah, that's kind of what I look at. If you're playing from a support, okay, so previous resistance can also be support. So we're looking at this. We can consider this as a support. Things like to backtest their previous all-time highs and then make runs from there. So from this high, we did shoot down a little bit more, but like I said, I consider these levels. So all the way from the top of this level, the very top, to the bottom, or to this candle, that is all a level you could play off of. And yeah, you want to give, it came down hard and fast. It was earnings, so that is actually added. Yeah, it could have been earnings relaxation. So that could have been a hard thing to play, but anyways, when you're playing off a support, you want to see it flush down. You want to see like a waterfall effect. So from here, actually, I'll even go over that. We just saw an absolute waterfall. So it came down, it cooled off a little bit, and then it just absolutely it comes down so fast. And so that's yeah, like if even if this made a straight shot down, that would be probably even more powerful, because it's just making every time frame so oversold that it might still flush a little bit further, but you can still expect a bounce. And then you would go up a time frame to make sure that, like, whatever time frame you're playing, it breaks. So that would be weekly at this point for Apple. And when this weekly tops out, which it doesn't look the best with having this big upper wick, but it needs to break down first, then I would be looking at the low of here. And that would essentially be a head and shoulders at this point. So as long as this low holds, I'm fine. But like I said, this is all profit position anyways. It expires in March. Yeah. And it's risk free anyway. So anyways. Okay, so that is playing off a support. Play big moves. Like that, yeah, that would have been a great entry right there. It would have been, it's hard to play, but like when things move down very quickly and get overextended, you expect the biggest bounce, but have something to play off of, a level to play off of, sorry. Okay, inside bars. Playing an inside bar on a day. So Palantir, I saw a good one. Okay, this one, when you play inside bars, right here, if okay, say this bar happened and you're looking at getting into Palantir this day. We're opening way up here. The only real important levels are the high and low of the day before. Unless one of those breaks, when you open up in the middle of a day, you can expect an inside bar. The day before, if you're just in the middle of the day before, the highest likelihood that the next day will be an inside bar, and that is just probing for a liquidity. Liquidity is drying up, and it kind of squeeze. Then we see a squeeze, and it fires. So this is a tightening range. Usually it's an equilibrium, and you play off the equilibrium essentially. So what day is this? Monday, November 24th. So, all right. This is fun. Okay. So we had this day. This is the day that it's shot down, and you're like, oh, okay, now I'm interested. So the next day, it opened around here. Okay, sorry. Yeah, when we open, you're pretty much, actually, no, it would be here. I'm going to take off extended hours, maybe. I'm not sure where it is, actually. Yeah, so we open up in the side, anyways, we open up inside this daily bar. This is the daily candle. We open up. The only real supports we have to play off of are the low of the day before and the high, the resistance. So if you're making an entry, you would make your entry at with a stop. You'd wait till it gets to this level, and you wait for a 5 minute, close to this level, but you wait for a 5 minute candle to pivot. You don't want to just buy it before and hope that it holds. You want to see if the 5 minute candle, like where this flushes down and gets this little point, you want to see the 5 minute candle hold and then break to the upside, and then you would have your stop at the low here. So in this candle, this actually opened up as a daily inside bar too. So it just tightened up here. And if you would have just bought the open, it was right near the top of the previous day's candle, and you would have wait for a five minute pivot to the downside. Or sorry, this would be if you're going short. But I don't recommend going short. Anyways, yeah, this is what the shorts would have done. They would have played a 5 minute, make sure that the 5 minute pivots to the downside with their stop at the high of the day before. And we ended up going close to the low. And we're just tightening. It's a tightening range, essentially. Hourly tightening range. Eventually we broke bull. But off of these equilibriums, you would play a pivot as close as possible as you can to that support, but you would want to wait for a 5 minute pivot. So inside bar, wait for a 5 minute pivot between the high or low. If you're going short, you would wait a 5 minute pivot from the high, and that's just if your daily candle opens up in the middle. So here it happened again. It opened up here. It maybe went up. It didn't burst through. So shorts made their entry on a 5 minute pivot, or maybe some bought it preemptive or had their stop above the high. But we ended up just getting range bound on this day, and this candle was the deciding day, in which we show a bunch of follow through. So that's how to play an inside bar. Just if you're opening in the middle of a range, focus on the high and low of the day before. And the break of that is important, the day before. All right, the last, so gap ups. If we are gapping up and there's news or earnings or something of that sort, how would you be playing that? All right. So this, we'll say we'll play Palantir. So when names gap up, they like to flush, and they like to fill gaps, essentially. So essentially, that's not the best example. Okay, this day here. So this gap up, this would have been hard to play. Like, people could be expecting it to fill this entire gap, but it didn't. And what on this day, what you would have been looking at is the first 5-minute trend change to the upside. So if it shot down there, you would wait to see a 5-minute trend change at least before you make your entry, because that would show it's still strong and there's potential for a lot more upside. Then you would have to have your stop at the low of where that 5-minute trend change started. But on this day here, this is a perfect example. This gapped up right to this level from this day. It's showing continuation off this earnings. And then from there, it flushed down and tested the high of the day before. And from this, the high of this day before, you would be waiting for a 5-minute pivot to the upside. So wait for that 5-minute pivot, and if like once it pivots, you make your entry, and then your stop would be at the low. Because if this low breaks, then we're opening up this entire range of this candle. That's what happens. So you're trying to get a low risk entry for a 1 hour higher low. And as you can see, we got a lot more upside to that. And you're still trying to get risk free. Get yourself in positive positions with positive free positions anyways. So this was another one. We gapped up, tested the high of the day before, and we went a bit further, but we ended up just being in a doji day. Yeah, so that's how I play gap ups. Gap up, wait for the 5-minute to hit the high of the day before, and wait for a 5-minute pivot, and you would have your stop under the low. All right, and yeah, that's pretty much what I look for as far as entries. There's a bunch of different styles, and it's up to you what you can feel comfortable with. Like I said, my personal favorite is the first hourly or 4-hour oversold coming from an all-time high. That is my favorite entry, and it just seems to be the most successful as far as I'm concerned. All right, thank you very much, and have a great weekend.